Right. Okay, guys. Good afternoon and welcome back. Let's start the class. Uh, yesterday we discussed about purchase invoice and sales. Sorry, credit note and debit note. I told you when the goods are returned, we prepare credit note, right? So, which means we means the customer. Sorry, when the goods are now think it's like this. You need to have a clear idea. Now, when the goods are returned, when we purchase, now think I'm the customer, right? I'm going to return it. So when customer return the goods, customer prepare the purchase goods. When customer prepare returning, customer prepare debit note, right? When the supplier receive the return good, right? So supplier prepare a credit note, right? So now you can see in here we are going to discuss about now purchase return outwards the purchase things are returned, right? So a purchase credit note. Sometimes the buying goods, business goods. Sometimes a business buy goods for resale, but then has to return some of goods. These returns are known as purchase return or purchase outward return outwards. When the customer return the goods to the supplier issue a credit note. Right? The credit note is sent to the customer. Supplier prepare a credit note. The credit note are listed in the purchase return day book, right? So most of the time, though we return the goods, supply is not accepted. So though when we are returning goods, though we prepare the debit note, we can't record the things in the purchase return journal, because if the supply is not accepted the return goods, we need to keep them as same as we purchase. But when the return goods are accepted by the supplier, then we can return. That's why we base credit notes, right? This is also called as return outward J book. Various invoices are entered into the purchase day book. Let us assume that some of the goods received from two of the businesses suppliers were not satisfactory and were returned. The supplier then issue credit notes to rectify the situation. The credit notes will be entered in the purchase return day book are shown as you can see. Now you need to in line with this is the credit purchases, right? We purchase goods from these customers. Out of these customers, we are returning the Fuller and Sons, right? And A. Levis things, right? So in Fuller and Sons, we purchase, you can see, pounds 172 and 80 cents, 172.80 the purchase value, right? So 172.80, but out of this we return only this value, other things we are keeping. When it comes to A. Lewis, you can see we purchase for 624. So from that we return this amount of thing. Hope it's clear to you, right? Send me a thumbs up. So we return this kind of things, right? So right. So let's write an example. Let's write an example. So then you can have a clear idea. Example, right? Example. Below are the purchase returns of Amara PLC, right? So during August 2020, let's take July, last month, July 2025. Date, supplier, value, right? Date is July 15. Supplier is Fuller and Sons. Fuller and Sons. Right? Value is 3840. Then 26th of July, A Lewis. A Lewis 120. Prepare number one. Purchase return journal, right? Number two, ledger accounts, right? So you can see this is the format of the purchase day, return day book, right? So let's prepare number one, day number one, date, supplier, the value. Purchase return day book, another word, purchase return journal, return outwards journal, right? Date, supplier, the value found, right? So date 15th of July, supplier we return to Fuller and Sons 3840. Then 26th of July, A Lewis 120. When it comes to total, you can see it's 158.47. Better you can write. So 31st of July, credited to, I'll tell what is, why is that credited to purchase return account, right? So in number two, asking about ledger accounts, right? So we need two things. I told you there are two things: receivable ledger, number two, payable ledger, number three, nominal ledger. Now when we purchase, we record in the payable ledger. When we return also, we record in the payable ledger, right? You can see. After the credit, now we based on the credit notes, right? Not the debit notes. Though we prepare the debit notes, we need to based on the credit note suppliers things, because if the supply is not accepted, something will happen. So I'll prepare the receivable note, receivable ledger, sorry, payable ledger, one, two, right? Fuller and Sons, and the other one A levies. These now already we have purchased from them, right? You can see we have purchased 8th and the 7th. From Fuller we have purchased 172, right? So July 8th of July purchase, we initially recorded purchase account debit, the purchase amount 172, the initial thing. The from the A levies 17th of July we initially purchased 624, right? So out of that now we are returning, right? I told you. So when it comes to the returning, we record in the nominal ledger as well. Under nominal ledger we identify purchase return or return outwards. When we purchase goods, we write it purchase account. Purchase is an expense. When we return goods, purchase account, return outwards account also expense account, but expense decreases account. When we purchase, we debit the purchase account. Sometimes you may think why we can't credit the purchase account when we are returning. No, instead of crediting to the return purchase account, we credit to the return outwards account. So 15th of July return outwards account 38.40 cents. Now when we balance this, now we can tell how much is the payable amount. We purchase 172 and 80 cents things, but we are returning 38 and 40 cents, right? So 26th of July. Now first of all, the date should be the purchase date, then the returning date. So why? Without purchasing, we can't return outward. 120. We purchase 624 worth of goods. We returning 120 now. We need to pay the balance. 31st of July. You can see. You can write it as creditors. So the total is 158. This is how we record, right? So how we recorded in here, you can have a clear idea. Yesterday I told you same way. Purchase returns, purchase returns journal, posting to ledger. How we posting to the ledger? Posting to ledger, ledger, right? Relevant creditor account, debit, right? On the transaction date, the transaction, right? Purchase return account, credit. At the end of, at the month end date, month date, right? This is under payable ledger, This is under nominal ledger. And just remember, record based on credit notes. Credit notes. Supplier issuing. Issuing by the supplier. When we return goods, now you know there are two parties. Now you know there are two parties, right? Customer and supplier. When the customer return goods, customer prepare debit note. When the supplier accept it, supplier issue credit note. We can't, because if sometimes the supplier will not accept, that's why we base the credit notes. Easy, clear to you guys? I am audible to you? Send me a thumbs up. Hope you can hear me, right? So finish it and raise your hands. Then let's go to the other one. You done, raise your hands. Huh? I'm waiting for all your raise. Can you hear me, guys? Send me a thumbs up. I want to see everyone. Huh? Better if you can turn on the videos and wait. You done, raise your hands. Hurry up, faster. So you done, raise your hands. If you're still writing, send me a thumbs up. Turn on the videos and wait, guys. Well done, no still writing. Vinil, are you still writing? No, have you finished? Vinil, can you hear me? Can you hear me, guys? right? I'm audible, right? Done or right? Done, right? Right. Okay. Now we have done the purchase return or return outwards journal. Right. Next part, you can see the same thing in here. The text in the book, you can see it's the same. How we after credit notes have been entered into the purchase return day book, the next step is to post the credit notes into the individual supplier's account. At the end of the month, the total of the net goods return are posted to the purchase return, the nominal ledger, the book. The bookkeeper will now debit each supplier's account in the payable ledger with the total of each creditor. Credit the purchase return account with the total of the net good returns. Using in and out, the entries would be as follows. You can see the same thing, right? So the same thing I have discussed, you can see here. Next one, sales return. Now, when we purchase goods, we return, right? Sales return means the same thing. Now, purchase return record by the customer. Sales return record by the supplier. Why? When supplier sell the goods to the customer, when customer return it, how now we just till that we just recorded how now there are customer and supplier. I told you, first of all, supplier send the goods, right? Send. If the customer is not agreed, customer return, right? Return. So now we just discuss how customer recording is the purchase return. Purchase return. Purchase things are returning. Now we need to look at how supplier recorded. That is the term for sales return. Why? Selling things return. Now in here, when supplier send means it is from the customer point of view, it is the purchase. We think about how uh, customer recorded we discuss. Now we need to know how supplier recorded. That is the term called sales return day book. Sales return day book. In another word, return inwards means return inwards means selling things again coming in return inwards. Purchase return means purchase things we are giving again sending. So that's a return outward. Outwards day book. We call it as journal. We call it as journal as well. Right? Okay. Let's see. When the goods are brought and sold, it is inevitable that some goods will be unsuitable. For example, they might be fault or damage. not suitable. For example, the wrong type, sales or the color, part of the incomplete consignment, subject to a overchange in the on the invoice. When this happened, the supplier must correct the situation. You can see sales return are also referred to as return inwards, while purchase return or return outward. When the purchase things are returning, we call as outward from the customer point of view. When the supply point of view, when the sales things are returning, we call as in, right? So sales return or return inwards journal, credit note, So when the first supplier receive the sold goods again as a return, supply issue a credit note, right? Customer also return accounts based on the credit notes. If the goods suppliers are unsuitable, the supplier will need to rectify the situation. The customer trade receivable was sent an invoice when the goods were delivered, so they are debt to the supplier trade receivable for the value of goods. Therefore, when the supplier makes an allowance for goods that have been returned or a reduction in price is agreed, the supplier issue a credit note to the customer trade receivable. The credit note shows the amount of agreed reduction. So an example, the credit note. Bookkeeping entries for revenue or the sales return note, right? So in here you can write sales return, another word we call as revenue return, right? So credit notes are source documents. They are listed in the separate books, right? So called the sales return day book or the return out inwards day book. Figure 5.7 shows some entries in the sales day book. If two of the customers had the problem with some of the goods invoice and were each sent a credit notes to rectify the situation, the credit notes will be entered into the sales return day book are shown in below. Now you can see in previous situation, you can see these the sales, right? So we sold to Grams and Sports 480. 480. So out of the 480, Grams and Sports returned these kind of 86 and 40 cents, right? So when it comes to Sang Sports, we sold on credit basis, you can see 230 and 0.60, 213.60 cents. Out of that, Sang Sports returned this amount of goods. Hope it's clear to you, right? So within an example, let's have a clear idea, right? There's a control accounting as well. I'll explain it later. So that an example. Below are the sales return. Only the credit sales can be returned now. Sales return of Amara PLC during the July month 2025. Date, customer, and the value. Right? You can see the date is July 11th, July 11th, and July 24th. July 24th. Customer, Gramson Sports, Gramson's Sports, right? Then Sang Sports. Value is 86.40 cents. 67 required. Number 1, revenue return or sales return day book, ledger accounts. Right? When we prepare the revenue return day book or we can sales return day book, another word, return inwards journal, pounds value, customer, who are the customer again returning date, 11th of July from Gramson Sports, 86.40 cents. 11th of July, Sang Sports, 67 and 20. Right? In here we write 31st of July, debited to return inwards or purchase return, sales return account. You can see the total 153 and 60 cents. When we prepare the ledger, we need receivable ledger. Receivable ledger. Right? We already sold the goods. So there are two things. Gramson's quotes, those are assets accounts. Sang Sports, right? Sold dates you can see 11th of July. So, sorry, uh, sold dates are 4th of July, 4th of July, and in here Sang Sports 29th of July, 29th of 29, it should take 29th of June, let's say previous month, right? Last month sold goods return in this month, right? So you can see sales. We can identify sales account credit under nominal ledger, 11 debtors account credit in here 480, 213 and 6, right? When it comes to the receive, we need under nominal ledger, we can identify, initially we identify these two debit, sales account credit. So in here we draw return inwards account or sales return account. Sales account also an income account. Return outwards also account also as income account, but is income decreases account, right? So 11th of July, return inwards 86 and 40. 24th of July, return inwards 67 and 20 cents, right? Then month ended 31st of July, you can write debtors In here, you can see the total is 153.46, right? 46. How we recorded, right? Return inwards journal, posting to ledger, posting to ledger, right? You know, return inwards account, debit, right? On on at the month end date, data account credit, the transaction. So this is under nominal ledger. This is under receivable ledger. Recorded based on credit notes issued by supplier, right? Easy, clear? You send me a thumbs up. Can you hear me, guys? I'm audible to you. Send me a thumbs up. I didn't lie you there. Right. So before writing, you can see here. So the total column in figure 5.13 is posted to the revenue or trade receivable control account will be learning. I'll tell you the control account in receivable ledger and payable ledger. There's a control account as well. Sorry, in the nominal ledger. So I'll explain it to you later. Posting credit notes to the revenue or the nominal ledger, credit note issued. After the credit notes have been entered into the sales return day book, each credit note must be posted to the individual customer's account. At the end of the month, the total net good return are posted to the revenue returns in the nominal ledger. The bookkeeper will now credit each customer's account to the receivable ledger with the total of the each individual credit notes. So debit the revenue return account with the total of the net good returns. Again, you may find easier to use in and out. Goods returned to the seller are entered on the inside of the revenue return account because the uh, goods are coming back in. The goods return uh, are entered out of side of the individual relevant customers account as they are sending the goods back out to the supplier, right? You can see the same way how we write. So now we need to go to the cash discounting and go, right? So we have enough time to go move into that. So finish it and raise your hand. Is it clear to you? Send me a send, write it and raise your hands. Don't raise your hands. Yeah, Liasha, once you done, raise your hands. Right. Okay, now we have done four things, right? Purchase daybook, revenue or the sales daybook, right? We discuss about then purchase return daybook, right? And we discuss about revenue return date. Right. Okay. Now, can you hear me, guys? Yes, right. Now we are moving to the other part, cash discounts, right? Okay. Business prefer customers to pay their accounts quickly as to help cash flow. A business may accept a small sum in the settlement if payment is made within a certain period of time. The reduction in the sum to be paid is known as cash discount. The term cash discount is referred to given allowance given to quick payment. It is still called a cash discount even if the account is paid by the check or by direct transfer to the bank account, right? So I'll explain it. The rate of cash discount is usually stated as a percentage. Full details of the percentage allowed will be quoted on the all revenue documents produced by the selling company. Uh, the revenue document will also state the period within the which payment to be made. A typically period during which a discount may be allowed is 1 month from the date of the original transaction. Discount allowed and the discount received, right? Now it's like this. Write the heading, discounts. Can you hear me, guys? Send me a thumbs up, right? Write the heading, discount, discount, right? Discount means normally, right? Reduction in the value, right? Discount means, discount means reduction in the value. There are two types of discounts. Discounts, cash discounts, cash discount, and the trade discount. Trade discount means reduction in listed price. Reduction in listed price. I'll explain it. Cash discount means, right, reduction in the sum to be paid. Reduction in the sum to be paid, right? So in here we discuss only about the trade discounts, and just remember we discuss only about cash discount. Trade discounts are not take into accounts, not take into account, right? So I'll take an example like this. Now think this is the business, right? So discounts are happening. This is the business. Discounts are happening related with stocks. Business purchase goods as well as business sell the goods. Business purchase goods used in two ways, either cash basis or either credit basis. Business sell the goods on credit basis as well, either cash basis or either credit basis. When the business sell the goods on credit basis, we identify the other party as debtor or trade receivable. When the business purchase goods on credit, the other party we identify as creditor, we record in the payable ledger, we record in the receivable ledger, right? So if there is any reduction in the list, now you know, if there is any reduction in the listed price means think the listed price is 100, deducting 10, so we are paying 90, right, in the transaction number 1. In here transaction number 2, right, you know, think our cash selling price is 2000, we are giving 200 discount, so the purchasing party customer only need to pay 1800. These are trade discounts, these things are trade discounts, this 10 and 20. Why? It's because of the selling and purchasing. And think we are purchasing 1000 worth of goods on credit, supplier or the creditor allowing 200, so we need to pay only 800. This is also trade discount, right? Number 3, if any discounts given when purchasing and selling, we call as trade discount, right? Okay. So if I take the fourth one, think we are selling 4500, we are allowing 500 discount, so customer is only want to pay 4000 within the given term period, right? So if I take the receivable ledger, right, and payable ledger and nominal ledger, right? Now think, I'll take the this supplier as A, this is B, this is C, this is D, right? Okay. Send me a thumbs up if it is clear to you. Now I told you all these 4 are trade discounts. Discounts giving, purchasing and selling. Trade discounts are not taken into accounts, right? We record after the trade discount. Now when it comes first one, since it is a cash basis thing, it not goes to the payable ledger. So you can see cash account debit, cash account credit, because we are paying 90, right? Purchase account debit 90, because since discounts are not taken into accounts, right? Trade discounts are not taken into accounts. Trade discount means discounts giving when purchasing and selling goods, right? Now when it comes the second one, it is also cash basis sale. So number 2, we are receiving 1800 as cash, right? I'll draw the purchase account, space purchase account number 1, 9. So in number 2 goes to the sales account 1800. So it's number 3, right? Number 3, not 800, it's 800. Oh no, 1008 number. Now number 3, right? When it comes to number 3, we purchase goods on credit basis from C. So we need to pay. We need to open an account called C. C's account credit 800, right? Purchase account debit 800, right? So because this is on credit, but we are purchasing. When it comes to credit basis sales, there is a receivable from D, 4,000, right? We sell 4,000. But now think, the party who's selling the goods imposing a rule like this. Like this. Now the creditor giving a condition like this, pay within 1 month, within 1 month. If within 10 days, allowing 10% discount. This is only for the credit basis transaction. This is a trade discount, right? We, since we don't record the we are not taking into the accounts, we record after the discount. Now when we are selling this to the customer debtor, we are giving pay within 1 month, within 1 month. If within 15 days, allowing 300 discount. What is this discount? This is another thing. Now there is no any compulsory requirement. There should be both trade discount. This is a cash discount. What is the term called cash discount? Cash discounts are happen with credit basis transaction. To collect the cash as soon as possible, supplier giving a discount to the creditor, which means, sorry, debtor, means the customer, right? Now, if I pay to this supplier, which means creditor, within 10 days, right? If within 10 days, if within 10 days of the, if within 10 days, right? I don't want to pay 800. Why? I want to pay this 800 minus 10, which means minus 80, which means we can again receive 10% cash discount. Is it clear? To send me a thumbs up, right? So we only need to pay after deducting the cash discount, right? So which means 720. If this debtor pay to us, right? If within, but if I pay to this person after 10 days, I want to pay the full amount, 800, right? So if within 15 days, because I told if you pay within 15 days, allowing 300 discount. So this person need to pay 4,000 minus 300, which means 3,600, right? This is a cash discount, number 5 and number 6. Understand? Hope it's clear to you. Number 1, 2, 3, 4, right? 1, 2, 3, 4, 1 and 3, these are trade discounts received. Discount received because it is related with purchasing goods. They are not taken into accounts. 2 and 3, these are trade discounts allowed. Discounts allowed. We are not taken into accounts because it is about purchasing and selling goods. But when it comes to number 5, right? Number 5, it is a cash discount received. We take it to the accounts because we receive a cash discount. Because supplier wants the money quickly, that's why he is giving a discount. Number 6, this number 6 is cash discount allowed. You also need to record it. Is it clear to you? Send me a thumbs up, right? Hope you got the clear idea about the discount part, right? Okay. Now is though this person is liable to pay us 4,000, now he is paying to us 3,600. Understand? 3,600, right? Paying 3,600. So how we recorded number 5, right? We receive as cash 3,600, right? We credit person 3,600. But if we balance it, you can see there's a 400, right? 300, not 600. This should be 700, right? 700. Sorry, 3,007. But if we balance this one, we can identify 300 balance brought forward into the debit side. But it's no actual the thing, because I told this person no, not to pay 300, right? So under nominal ledger, I want to write off this as, I want to identify this as our expense. Why? I want to receive 4,000, but I am telling, okay, pay only 3,700. If you pay within 15 days, I don't need that 300. So this person paying only 3,700. If so, the allowed discount is our expense. Right? We are not receiving it. Right? The receivable, this is a discount allowance means the cash discount. Because trade discounts are we are not taking into account. Right? So number 5, again debiting 300 in here. Right? So you can see 3,700 we are receiving cash, 300 we are allowing, this is an expense, right? So now if we balance it, there is no any BCD, BBF, you can see now the debtor account is closing to 4,000. Now if I take this person, I want to pay, right? He's telling no need 800, but if I pay within 10, now if I think this person, if this person pay within like 12, after 20 days of the transaction, you need to pay the full amount, 4,000 credit in here, cash debit 4,000, no more discounts. But think if I pay this person after 10 days, I want to pay the full amount, cash credit, cease account debit 800 full amount. But I'm paying within 10 days, so I want to pay only 720. If so, my cash credit 720, this is debit 720, right? And also if I balance it, I can see there is a 80 credit balance as BBD. I think like I'm need to payable. No, actually I don't need to pay it because that person asked me to not to pay. So it is our income, because when supply is telling no need to pay this, it is our income, right? Income, right? So you can see number 6, the balance 80 comes to, right? So you can see now this account balance to be 800. No BCD, BB value, no any life, right? So, right. This is the full summary. I'll give you in detail. Can you please write it and raise your hands? Am I audible to you? Right? Just remember, cash discounts are giving, right, to collect the cash as soon as possible related with the credit basis transactions, right? When the purchasing and selling goods, these are, now if I take these two, these are the trade discounts. These two are cash discount. These discounts are cash discount. and there's no statutory requirement. Both should be there. Sometimes there can be only the trade discounts, no cash discounts. Sometimes there can be only cash discounts, no trade discounts. Like sometimes both are not there. It depends on the supplier's intention. Incident raise your hand. Student raise your hands. Right. Okay. Now, all good, huh? Right. So now by taking this, we can write the double entries like this. Right. I'm going to erase it. Right. I will I will take till 4:15. Okay, guys, send me a thumbs up. Clear. Right. I'll take till 4:15. Then next day we need to do only this above. Right. So right. So I will take the double entry. Right. So now I'll go with only 5 and 6 only because these are the subjected. Right. So first one you can see uh, credit purchase, credit purchase. You can see purchase account debit. We purchase 800 worth of goods after deducting the trade discount. Right. So you can see customer C's supply C's account credit 8. In here is sold to D, number one credit sale. You can see D's account debit 4,000, sales account credit 4. Right. Now number two, cash payment. Right. Cash payment. We pay only 720. C's account debit 720. Cash account credit 700. Number two, cash receipt. We received 3,700. So cash account debit 700, 3,700. Right. So lease account credit 3,000. Number three, discount receive. In here, discount allowed. Right. So you can see C's account debit 80, discount received account credit 8. Right. Discount allowed account debit 300, D's account credit 3. But if I need, I can write both second and third at once. Second and third at once, like this. You can see C's account debit 800. I'll explain it. Discount received account credit 720. Discount received account credit 80. Cash account credit 720. Right. In here, discount allowed account debit 300. Right. Cash account debit 3,700. D's account credit 4,000. Now this is about uh, 5 is about creditor. I'll explain it. Huh? 6 is about debtor. If it is about creditor, right, which means discount received plus cash payment, there should be C. So it's two credit entries. I'll explain it. Send me a thumbs up. Creditor means two credit entries, right? If it is debtor thing, I'll explain it with T accounts, then you can have a clear idea. Debtor thing, two debit entries, two debit entries. Now it's like this. Look here, right? I'll explain it. Or it is the previous part. Now, you know, right? Now, you know, so, right? So, receivable ledger, sorry, I'll take first one, the payable ledger, and the receivable ledger, right? So, in payable ledger, we can identify C. In receivable ledger, we can identify D. From C, we purchase after discount 800, purchase, right? We sold D to 4,000, right? Now, you know, C's, now when it comes to nominal ledger, nominal ledger, right? I'll take cash, discount receipt. Here, cash, discount. You know, in here, what in previous one, what I have done. So I debit here, credit here, debit here, credit here. Two credit entries and two debit entries were there. But instead, without doing that, totally I can debit 800, right? 720 to here, 80 to here. So credit also tally. We debit the creditor account, discount received amount plus cash paid amount totally, and cash amount paid amount we credit, discount received account we credit. Easy, clear, right? Last part, send me a thumbs up, right? Last part, last double entry, right? So we are paying. Yeah, you can leave or you can take a screenshot and go one side on it, right? So this person paying only 3,700 and I'm allowing the discount 300. So totally the discount receive allow amount plus cash received amount we can credit to here debtors account without crediting to two credit entries. In here, without debiting two entries, we can write with one. That's why if it is creditor cash paid plus cash paid plus discount received, two credit entries. If it is a debtor, two debit entries, which means cash received per discount allowed. Easy, creative. Send me a thumbs up, right? Finish it and raise your hands.
Done, sir. Done.
Right, okay, you have done right. Hope you understood the full scenario. So now next day I will explain about this, right? So right, then we can maintain the accounts as well. Then the full part, right? Okay. So this is enough for today. We are meeting on upcoming Thursday, right? Upcoming Thursday, and there will be some additional classes as well. I'll explain it to you. So right, so Thursday night, so and Saturday, Friday morning. Sometimes I will put additional. Right, okay. Thank you for the participation. Bye. Have a nice day.
Bye, sir. Thank you,
Bye.
sir.